Look, traditional bonds have been sold as the safe way to play the debt game, right? But anyone who's lived through even one downturn knows how painfully slow and dead-end that path can be. You're stuck accepting measly yields, stripped of real growth, while inflation quietly eats your returns alive. It's frustrating as hell. Capital that's supposed to shield you ends up feeling like a leash holding you back. You know this. You don't want to be trapped chasing tiny coupon payments while the market moves faster than that feeling? It's like watching an old rusty engine sputter when you know there's a damn Ferrari sitting idle. So why stick to that? Here's the brutal truth nobody wants to admit. Conventional bond funds have a blind spot. They can't capitalize on upside. They're stuck in a fixed mindset, always safe but never smart. Meanwhile, convertible bond funds? They screw the rules a bit, and in doing so, they unlock options no plain bond can offer. They're hybrids. They're debt with an equity kicker. That means when the company rocks the charts, you don't just get your coupon, you get shares, sometimes at a discount, sometimes right when it matters most. You're not just a creditor anymore, you're a player in the game, and that's huge. Now don't confuse this with blind gambling. This isn't random speculation. Managers of convertible bond funds are deep in the trenches, combing through companies with the precision of a surgeon and the aggression of a hunter. They know how to spot firms that are about to take off, but still have solid enough balance sheets to protect you if things go sideways. It's like having a safety net under a tightrope walk in the markets, giving you both height and security at the same time. That's why, when the market swings, converts don't just survive, they can actually beat the traditional bonds. You get income from coupons and the potential for capital growth baked in. If you're smart, and you are, you're sick of watching your fixed income slice come up short without growth. You want to push the envelope without blowing up your portfolio. So first, stop idolizing safety that's just safe for the system, not for you. Embrace convertible bond funds because they're designed to fight on two fronts, income and upside. But here's the kicker. Don't just dump cash blindly. Get the managers who know when to exercise those conversion rights, when to hold, and when to cut loss. Those calls matter. They're the difference between playing security guard and being the strategist calling shots. Don't underestimate how this aligns with your bigger mission. If you're building, investing, leading, you need tools that break free of old constraints. Convertibles let you do that in fixed income. They give you an edge that's real, that's flexible, that's sharp when markets are uncertain, but the growth potential is screaming. That means your capital works harder, smarter, not just safer. Here's the practical move. Dive into convertible bond funds that don't sit still. Look for funds where managers actively balance credit risk with equity exposure, who don't just chase yield, but hunt for opportunities in market dislocations. You want asymmetric risk-return setups, where your downside is cushioned, but your upside gets unleashed when the company's converting. If you're standing on the sidelines with standard bonds, you're handing your money away to laggards and mediocrity. Convertibles are the sharper tool, the one for guys who refuse to settle for less. So stop settling for the old story. Your capital deserves more, your ambitions demand more. Traditional bonds are safe, sure, but they're a slow death for anyone who wants real progress. Convertible bond funds don't just protect you from the downside, they hand you a key to unlock growth that's been off limits while others got stuck in old rules. This is the push you need. It's sharp, it's strategic, and it's what winners are deploying right now. Make your move. Get ahead of the pack. Convertibles aren't just an option. They're a necessity for those who want to be more than just spectators. Subscribe to our YouTube channel and open the featured link to learn more.